Is there justification for taking money from the business when personal finances are not enough? How long does it take for you to bounce back from losing everything in business? It's really that straightforward. Start with one goal. How best can one invest in Zimbabwe? I'm an accountant, so this is really fun for me. Hi guys, welcome back to Views from the Skew. It is me again, the Queen Dre. If you're joining me for the first time, this is Views from the Skew, a place where we use real life and fictional stories to help better our personal decision making. I did a Q&A on my Instagram. I asked I asked everybody actually to ask me questions on business and personal finance. And if you're not on my Instagram, just follow the link in my bio, okay? Not in my bio, what am I saying? Just follow the link in the description. And if you want to read some of my blogs, also there's a link to my website in the description. We are talking business and personal finance. I really like this session. I like the quality of the questions that are here. And I hope that I will be doing a lot more of these in the future. So please stay tuned and enjoy. The first question was, at what stage would you say your personal finances are now in order? Is there a formula? Okay, that's a question that came through. Somebody wants to know, how do I know that I'm doing well in my personal finance? In my personal finances, and what kind of formula do I use to determine that? So to answer that question, the issue about personal finances here is that they're all dependent on the goal that you have set for yourself. So what is your current personal finance goal? And I think because of the situation in Zim, we often feel pressured to do everything at once because we feel like we're falling behind, right? So you want to first answer that question. What am I trying to achieve with my personal finance? Do I want to buy a property, for instance? Do I want to have emergency savings? Am I trying to build up a retirement savings fund? Or do you want to build an education fund, for instance? Or whatever the issue might be, save to invest. So based on that goal, that is how you will know how well or not well you're doing. And your goal will also determine what you do and what you don't do with your personal finance. For some people, it might be possible to achieve all of these goals all at once, but for some of us, it really isn't. So what I would say is start with one goal, master it. Once you're doing well or you've done well in that goal, you can then move on to the next. So you will know when things are okay when you have set those goals and put in the work to achieve them. The second part of the question, I feel, is talking to a place where you've got the money and you're asking, what do I do with it? Or what do I put it towards, right? So there are some formulae that you can adopt. For instance, when you're just starting out with saving, the minimum that is recommendable is 20% of your monthly retainer. So let's say you're getting a salary of $1,000 a month, 20% of that goes into your savings. But then again, how you approach saving would depend on your budgeting system. Are you allocating the 50% towards specific categories in your budget plan? Or are you choosing to save a specific amount first, then doing whatever you like with what is left in the pay yourself first budgeting system? Others prefer budget binding, what used to be called envelope binding by others. It's now called budget binding. I think there are now journals that can help you with that. And others use the zero-based budget. There are so many other budgeting systems. For instance, there's the line item budgeting and hybrid budgeting. And with the hybrid, you're really just combining components of the several types of budgeting that works best for you. So how do you pick a budget, you may wonder? And it goes back again to your goals. There are different types of goal that you can choose. My favorite being the emergency fund. I think it's easy to start with, and it can really start to help you see the value of saving of having an emergency fund when you get into emergencies. For some, they may want to save for a business investment, startup capital that is, or to buy a car or a house, or for retirement or education, or to pay off a debt, or simply do something fun like traveling, okay? So once you know what that goal is and how to achieve it, that is via your budgeting system. That is then how you can see how well you're doing in that goal. I hope that answers your question. The second question is, how do you separate business and personal finance? Is there justification for taking money from the business when personal finances are not enough and there's no one else to get the money from? This one is really a really good one. I feel like it is a pretty tough thing to do even for seasoned business people. I'm getting giddy just thinking about it. For some of you who don't know, I'm an accountant, so this is really, really fun for me, given the kinds of experience that I've had looking at single-owned companies' books, or just, a company that's owned by one director and so on. The best in the game really struggle with this, that is separating your business and personal finance. So if we can start there, I think it will ease your guilt conscience. So don't feel very terrible about it. I know it can be emotional to build something to a certain level and then be the reason why it doesn't do well in the end. So the first thing that I would advise is that when you get into a business, any type of business really, whether it be a side hustle or your main focus, do not forget to pay yourself first. Even when you're doing well in your personal finances, always make sure that you pay yourself. Pay the market rate for someone doing that specific job if you had to hire someone to work in your position. Yes, really think about it. Even though the vast majority of us are more of jacks of all trades, we do the marketing, relationship management, client services, procurement and logistics, accounting and bookkeeping, and so on. But there has to be a number. What is that number? Think of it like this. If you had to get a PA to do part or all of your duties, how much would they charge for their services? Once you do that, you'll be able to either get your business to a level where you're able to pay that and get that salary. Or if you're already there, you're putting yourself in your payroll and making your first salary payment. So the next part of the question, let's say, is, are you justified to take money from the business? It really depends on what you mean by this. Remember that in accounting, a business is a separate entity from you. So don't borrow from the business what you cannot pay paid back. It's really that straightforward. So if you're hoping I would massage your guilt here, I think I'm just doing a terrible job. So to separate your business finance from your personal finance, it helps to get an accountability partner. If you can't afford a business partner or a business manager, personally, what I do is I record my business income and expenses, all of it, from the parking to the fuel to the stock packaging, etc. And I also record the instances where I use money that I intended for the business personally. And every month I sit down and ask myself, what did you do? So I make myself accountable and I improve as I go. So if I spend too much this month, I know I need to replace that money. And if I'm not doing very well separating those, what I've started to do is I now have two wallets, one that keeps my business cash and one that keeps my personal cash. And I make sure I never mix the two. I hope that helps. How long does it take for you to bounce back from losing everything in business? This question wasn't really clear, so I had to ask a follow-up question to get a clear understanding of the background. The writer described having started a service-based business that required the use of machinery, but in a month or two, her machinery broke down and she could no longer continue offering that service. What I heard when she was explaining her problem was an issue of working capital management. Again, even the best of us get into this trouble at least once in their course of business, okay? So to rewind, when you start a business, the temptation and probably average thinking is use all your money to either buy you stock or get you enough equipment to kick off the business. What we forget is that every business has operational expenses. These are your day-to-day expenses that the business will incur in the running of operations. Simply put, it will take some money to make you money. So when you draw up your starting up budget, that includes your stocks, purchase and your machinery purchase, you will also need to make an allowance for those operational expenses. It is what's commonly called working capital. For each industry, there's a working capital ratio that is standard. And what it does is that it measures the short-term financial health and liquidity of your company. It also helps to indicate a company's going concern. All right. So there are several ratios that you can calculate to sort of get the picture of where your business is. The first is the current ratio, also called the working capital ratio. To calculate this, you divide your current assets by your current liabilities. That is from your balance sheet. Okay. So the idea is to see if you're able to fund your operations and invest in growth activities. In essence, it should inform you if you are able to meet your liabilities in the next 12 months as they become due based on how much current assets you currently have. So if it is 1, that is good. It means the current assets that you have will meet your current liabilities. And it can be up to 1.5 in other industries where the production process or the cash conversion cycle is a bit longer. However, a high working capital is not good because what it means is you're not being efficient with how you put your resources to use. So in reality, what it does, it makes you focus on your sales strategy to move more stocks or make more sales, and also manage what you are owed and when you pay what you owe. All right. So if you are not in the cash business, that is probably a great indicator for your financial health. Okay, Audrey, what about if I get supplies and then I sell them cash? What does that mean for my working capital? In simple terms, it means that you will need to manage your cash reserves and consider having prepayments on certain items that you use during the course of your business, especially when you're able to get discounts based on those prepayments. So the working capital management strategy you will need should include saving cash, building higher inventory reserves, prepaying your expenses, and so forth. Otherwise, if you can't do this, measure your cash conversion cycle. That is the length of days it takes you to get supplies or stocks and sell them, and focus on reducing those days every cycle you go through. Using these strategies will help you avoid getting to a point where you are stuck and have no option but to close shop. When you make enough reserves, you can face every emergency when it comes. The question of how long it takes will depend on the nature of your problem and if you have the capacity to fix it. I hope that answers your question. The next question is, how best can one invest in Zimbabwe? I love this question so much. It is such a testament of some missing elements in our economy that has left us feeling defeated. It doesn't help that there's no trust with financial institutions in this country as well. What more, the ministry itself. But I also love how resilient we are as a people, and that we've managed to make the best out of our situations, at least good, if it's not the best. So yes, I do believe that there are some avenues in Zimbabwe to invest, but it really comes down to how much you are looking to invest and on what terms. My advice would be get in touch with a financial analyst from a private wealth and equity firm. I'm not really sure if they charge for consultations, but they should. But get an idea of what investing would look like for someone with your profile. The beauty of this is that private wealth firms can build a portfolio that best meets your financial goals. So whether you want to have a retirement fund, a mortgage fund, a savings, or just watch your wealth grow, they will give you options to diversify your portfolio into low risk and high risk areas, to invest in stocks and properties, and in some savings account that have good interest rates in countries that meet your expected returns. So they'll be able to do that for you outside the country, okay? To make sure that you hedge against certain risks that are in this country. The challenge, however, is that if you currently don't have much disposable income, it will be very difficult to commit to paying 500 US up to 1.5 a month. And in that case, what you can do is you can focus on doubling your income every month. What I mean by this is that you can start with $50 or $100. Okay, find something, anything that you can do and double it every month. So in the first month you're making your 50 into 100, and then the second month you're making your 100 into a 200, and then the third month you're making your 200 into a 400. It's pretty challenging, but what it does is at the end of, let's say, 1 year, it puts you in a better position than you were originally, and it also will challenge you personally. I think it will help to build some resilience and creativity in you. You know, how can I make this happen? And it should work as long as you don't touch any of that money. Just make sure that you've got that discipline as well. And so what it works is, it works similar to how compound interest would work if you were saving in a bank account. Okay, so I hope that answers your question. Thank you so much, guys, for tuning in. This was my first Q&A talking about business and personal finance. I hope I'll be having more in the future. And if you've got any questions that you want to ask, just comment them below. I will definitely get to answering them. I'll make a video for you, just a request, and I will make it happen. And if you've gotten this far, but you're not yet subscribed, I want to ask you, what is your problem? Do you just hate me? Please make sure that you subscribe before you leave the page. And if you can, please share it with a friend or a loved one. And I hope to see you again next time. Remember that you are enough and you've got everything that you need to be what you want to be. Goodbye.